Welcome back to Explain the Charts. Today is December 22nd, 2024, and we're tackling the USDCAD pair, analyzing both the current market news and the technical aspects of its charts. Recent news indicates a surge in USDCAD towards multi-year highs, exceeding 1.4400, primarily driven by risk aversion in the market and a decline in oil prices. However, some analysts predict a retracement below 1.4400 due to a softer US dollar. Let's start by examining the daily chart. We observe a significant upward trend throughout much of the period, with notable price increases occurring in several specific time periods. However, in late December, we see a substantial drop from approximately 1.44 to near 1.30. The volume during this sharp decline shows periods of heightened trading activity. Interestingly, the price recovery is less pronounced, suggesting a shift in market sentiment. Switching to the 1-hour chart provides a finer-grained perspective on price fluctuations. We can pinpoint specific instances of support and resistance levels within this time frame. The hourly chart confirms the volatility experienced in the daily chart, especially during the steep price decrease, and further reveals short-term fluctuations and retracements. Now let's zoom into the 15-minute chart to identify smaller price movements and intraday patterns during this time. The 15-minute chart clearly depicts the rapid price swings that contributed to the overall decline in USDCAD's price, and even shows periods where the price drastically decreased in very short periods of time. Observing the candlestick patterns on all three time frames, we note the presence of several bearish engulfing patterns which often precede a price decrease and a hammer pattern which often precedes a price increase. Key support levels appear near 1.30 and 1.35 on the daily chart. Key resistance levels appear near 1.38 and 1.40. However, the massive price drop in December shows these levels are not always reliable. Short-term, the market seems bearish given the recent crash. However, the potential for short-term upward movements exists, as seen in some price increases after the crash. Long-term, the trend was upward before the December crash, indicating potential for future growth. However, this crash raises concerns regarding market sentiment. In summary, the USDCAD pair experienced a dramatic decline in late December, raising uncertainty around previous key price levels. While the long-term trend showed upward momentum, the recent crash suggests a bearish short-term outlook. Monitoring volume changes and candlestick patterns will help identify potential reversals. The likelihood of the price reaching previous highs before the crash is low without significant shifts in market sentiment and a recovery in oil prices. A break above 1.38 could signal a shift to a bullish outlook, while a sustained break below 1.30 could lead to further downward movement. Keep a close watch on economic data releases and geopolitical events for clues about future price trends.